Well, hello and welcome to another video by Financial Learning. On today's video, we're going to review a Maxim Group analyst report for CleanSpark. That's right, we're going to go over some of the basics as well as some of the latest news that they have uncovered, and they're going to share their price target as well as the justification behind that price target. So, without further ado, let's get right into it. All right, and starting with the left-hand side, you can see here, this is a latest report as of January 8th, and it is from Maxim Group. That is who did the analysis here on CleanSpark. You can see here closing price as of January 7th was $11.93. And you can see that 12-month target price at $22. Now, I'm going to jump into just why the analyst group thinks CleanSpark is going to hit $22, and we'll cover if that is the cap or if they are below what the consensus does have for CleanSpark. We'll get into that. And then you can make a decision for yourself. And again, reminding this is not financial advice. This is just my own personal opinion and should be used for educational purposes only. So, looking through this, I have highlighted a couple things. If I was to go over this entire presentation or this report, it is 26 pages long. I'm going to spare you from all of that, and I'm going to hit the highlighted sections here. I have already reviewed this entire portion. And if you have any questions, definitely drop it in the comments and I'll do my best to answer it. But let's start with that left-hand side. I did highlight the revenue, and you can see here the 2026 estimate is a little bit short compared to 2025. They have them coming in at $713.6 million. And then again in 2027, their estimate is just $719 million. Now, that is because of a couple of things, and they're going to go over that in their analysis. And again, this is not CleanSpark's projection in terms of revenue, but this analyst group. So I want to make sure that I make that very clear. Now, I already mentioned that top right highlighted section there, the $22 price target. We'll get into that. Let's go through some of the summary here and we'll get into the details. You can see here that CleanSpark did acquire that 285 megawatt site there in Sealy, Texas, and they are planning a little over 200 megawatts to be energized in 2027 for an HPC AI campus. Now, their total power under contract is about 1.5 gigawatts. I think it's a little bit shy of that as of the latest press release, but that is the total amount they have under contract as of, and they actually go back to November of 2025. So they are using the latest earnings statement for CleanSpark for their analysis. They're going to take some numbers that were provided in press releases like their mining reports, but when we are looking at some of the actual revenue generation and some of the other analysis, it's definitely looking at that latest earnings statement. So looking out past that, you can see the second highlighted section I have has to do with that balance sheet. They have them being underpinned by 13,099 Bitcoin, and that is currently, as of this report, still worth $1.2 billion. And when the price of Bitcoin was hitting around $120,000 per coin, of course, this stack was worth $1.5 billion. So keep that in mind as well. As the price of Bitcoin changes, the valuation of this company will change dramatically. And the analysis does use the price of Bitcoin as a pretty large factor in this price target. And looking at that third section there, it has to do with their 12-month target. They have them coming in at a revenue multiple based on their Bitcoin mining, and they're adding an estimated value of the infrastructure pipeline as well as some of the net cash in Bitcoin. And they give a really good breakdown of those three categories. And again, they're not looking at customer contracts as any part of this evaluation, but just the overall power, the land and power they have under contract currently. So I think that's important as well. But as we jump down a little bit further, I'm going to go ahead and scroll down throughout this presentation. So let me know again as I'm reading over this. If you have questions, drop them in the comments and I will do my best. And looking at the fourth section here, this is a portion of their about 1.5 gigawatts of contracted power. They have earmarked about 515 megawatts for sites approved for near term development. So, in my mind, that means they are looking to get some additional power energized in the near term. And we will see some of that in Sandersville. And of course, we will see some of that in Sealy, Texas. But it's important as I talk about those two sites. I think those are the two sites that are near term in terms of HPC AI. We're probably going to see those two up high in their priority queue. We may see some Atlanta sites as well, giving them a little bit of that edge compute, as they're going to be about 50 megawatts in total for critical IT load if you're looking at College Park and Norcross together. But I have a couple other things. Let's keep on going down. You're going to see it does have CleanSpark entering fiscal year 26 with a robust amount of liquidity and financial flexibility. And it does say that they have a substantial amount of cash in Bitcoin worth about 1.2 billion. Of course, that's their Bitcoin portion. And when they look at cash, they're looking at the amount of cash on hand as of that November 2025 when the earnings came out. And they had that convertible note get unlocked for them, which did provide a good amount of additional cash on hand. And they used some of that for buybacks as well as paying off some of their collateralized Bitcoin loans. So you can see here they talk a little bit about those collateralized loans. You can see here that they do plan on self funding a good chunk of their operations, again, without needing equity markets. And that's what they've been doing for the last couple of months. They have been selling a portion of their Bitcoin they have mined in order to pay for the cost of energy as well as their payroll items. So all of the cash that they need each month, they are able to get from selling that Bitcoin. And they're not just selling it at spot pricing, they are using their derivative asset management group in order for them to be able to get some additional premiums on top of just that spot price of Bitcoin. So again, that's really important as that does bring them additional value that not all of the Bitcoin mining companies are currently doing. And you can see here they have their different Coinbase line of credit and two prime line of credit lined out here. You can see they're about $300 million with Coinbase at about 8.25% interest. And with that two prime, it's $100 million and it does have interest at 3.55%. But it's worth noting that there is a market to market change in that interest rate. So it's not truly going to be 3.55%. It's going to depend on the day at which they do the drawdown and what the financial markets are looking like at that time. So keep that in mind if you're looking at that and trying to come up with some interest accrued for CleanSpark. Just make sure you understand how that mechanism for the SOFR works. Now, outside of that, they mentioned the total debt balance at $1.8 billion, and that would include their latest convertible debt. You can see here they have both the 2030 debt as well as the 2032 convertible debt listed here. And lastly, in this section, which I think is very advantageous, I talked a little bit about it in terms of that monthly sale, but CleanSpark is estimating about 12% cash yield from some of the derivative asset management activities. Now, they do a couple different things. They, of course, they do sell covered calls as well as cash secured puts against their Bitcoin holdings. So that is great. And if you think about it, either way, they're already planning on selling Bitcoin. But if they go ahead and mark it up with premium and do a covered call with that actual Bitcoin itself, they're able to get a little extra amount of money outside of the spot price of Bitcoin. And for whatever reason, if that option does expire worthless, they keep the premium, they do another one. So again, I think this is a great strategy CleanSpark has been doing. And they did share an update that just in the month of October, they hit $5.1 million in this damn activity. Now, looking a little bit further into their fiscal year 26 and 27 financial outlook, you can see here that the current price of Bitcoin is about $91,000. And again, there's no data centers currently under contract with CleanSpark, and their overall network share is sitting somewhere around, they have that 50 exahash, about 48 of that is being used. That's their average operational hash rate amount. They are considering, and when I say they, I'm talking about the analysts, they're considering the hash rate staying flat. So that's two things. That is one, not adding more hash to where their global hash rate position is going to increase. But at the same time, if the global hash does continue to increase on its own, they are assuming that CleanSpark will energize some additional ASIC miners in order to maintain that global hash rate percentage. So again, keep that in mind when you're looking at this analysis. And again, we'll talk a little bit more about that as we go on. Again, this is a lot on first page, but I assure you there is some really good information that is yet to come. And the last thing on this page is their evaluation. They currently have them marked with an EV revenue multiple of about 4x. And again, if you're looking at HPC, that EBITDA and that EV revenue multiple is much higher. So again, even though this analyst has them actually coming in about double their current price, you have to remember that it is not including any lease agreements that have yet to be signed. And in my opinion, the reason why is they don't have the terms and conditions of that lease agreement. They don't understand what the annual run rate is going to be for that revenue source. They don't understand the financing terms as far as how much additional debt they're going to be having to pay in interest. All of that information is necessary in order to get a better price target and in order for the markets to give them an appropriate multiple, in my opinion. So let's continue on from here. You can see here on this page, they go over the institutional ownership. They have them currently sitting at 74.8% and short interest is at 31.8. Now they talk a little bit about the consensus of the revenue targets, and the consensus would mean all of the analysts together. Currently, they're sitting at $766.3 million, and that was already disclosed in that fiscal year 25 earnings statement. But looking ahead at fiscal year 26, the consensus says CleanSpark will actually increase revenue up to $883.9 million in 2026 and $1,066 million in fiscal year 27. So again, when we're looking at this analyst report, it is actually on the lower end of the expectation, and they do line out exactly that. And they admit that as we continue on. And you can see here that when they are comparing the consensus, they're looking at a total of 13 different analysts, excluding themselves. And of those analysts, 12 have buys, one have hold, zero have sells. So again, that's important as we look over the price targets and we look over what the consensus has to say about CleanSpark. Looking on past that, we're not going to cover the bios of the CEO or any of the executives. You can definitely get that on the CleanSpark website. Let's look at some more on the investment thesis that this analyst has. Look at the positives. And I have some of this stuff highlighted a little bit of a different color in orange. I think that's because that is the most important thing to pull on this page. But looking over that, let's just read along. You can see here that CleanSpark is well capitalized to fund the development of the AI data centers amid rising demand for power infrastructure, and they're going to be able to harvest the volatility through their options premium selling strategy in order for them to generate some additional cash flow. So again, if you are a company that doesn't have any revenue streams and you're trying to get into the HPC market, you're going to have a rough couple of startup years as you do not have any revenue or cash flows going in to help fund that business. So again, CleanSpark has that. They've got a really nice Bitcoin hodl that they can take a collateralized loan against if they run into a situation and there's a lucrative opportunity for them. I do believe, according to Gary on the earnings call, he already talked about that a little bit. They will take advantage of that type of situation. And looking at that next section, I have some of this highlighted in a different color here, talking about how CleanSpark announced that 285 megawatt Texas location. The energization for that is approved in the first half of 2027. So whether the build out is still going on or not, they're going to have access to that power so they can start monetizing that power either through immersion mining with their most efficient Bitcoin miners, or if they happen to be ready to go, they'll flip the switch and start generating some HPC revenue in the first half of 2027 on this 285 megawatts. Now, of that 285, as I mentioned, 200 of that will be critical IT load. So keep that in mind if you are trying to do a calculation for the HPC power input. Now, outside of that, I want to talk about that Sandersville, Georgia site. This was a site that is very appeasing to a lot of hyperscalers due to the size and the fact it already has power approved for use. Now, it does say here that they have some near term availability and power capacity for AI compute, and it's an important asset that a lot of the companies there that are under the ERCOT regulation just don't have access to yet. So again, this near term for Sealy is going to be really critical as there's a huge queue, a line of people waiting for power. We'll go over that. We'll look at some of the McKinsey reports in just a little bit. But again, for Sandersville, they got the power now. If they want to get something energized at the end of 2026, by all means, they have the opportunities and they can go ahead and pull that trigger with a client. They've already reached a actual agreement with energization in this first half of 27. So again, two really important factors that is going to help them get about 400 megawatts online as early as first half of 2027. I do believe we'll see some of that coming online either the very end of 26 or maybe the first quarter of 27, depending on how quickly they're able to sign a contract deal here for the Sandersville location or even for that Norcross, Georgia, and also College Park, Georgia location. Now, they do talk a little bit about that multi-gigawatt pipeline. When we're talking about their contracted power, it's sitting at about 1.5. They have another 1.7 gigawatts of pipeline capacity available. So I do expect to see CleanSpark coming out with some more announcements, aligning with more land and power now contracted over the course of this next year. Now, let's look at some of the negatives that this analyst had to state. It does have here that Bitcoin, of course, is inherently volatile as a asset, and it does pose a certain amount of risk. Margins could compress with the price of Bitcoin and their mining operations. And again, their balance sheet could face pressures against negative margins on their mining. So again, if the price of Bitcoin continues pushing lower, that could end up causing CleanSpark to need to draw down on some equity. If the price of Bitcoin does the opposite and hits 120,000, 130,000 in the year of 2026, CleanSpark is going to be off in a very good start for HPC as their Bitcoin revenue and margins are going to be very appealing. So again, the negative side is that the price of Bitcoin could go down further. And again, CleanSpark does plan to expand into additional states and sites. And of course, anytime that you're expanding, whether it's through a merger and acquisition or it's building a greenfield site, you're going to need personnel, and there's going to be a lot of hoops and various toll gates that have to be jumped through or broken through in order for you to be able to actually hit your goal. So again, that's why it is considered a negative here. CleanSpark will have to expand in these other states, and some of that is just an unknown. And with that expansion into the other states, of course, that does bring on that complexity factor. And again, we talked a little bit about that already. The complexity is just because there could be some various state regulatory actions that do come out this next year that CleanSpark just cannot prepare for. And they need to have additional personnel. And there's a lot of milestones that need to be hit, whether this is an M&A or whether this is greenfield. And then the next section, as far as some of the negatives, would be some physical expansion can weigh heavily on CleanSpark's bottom line. So not only do they have to have concerns about the price of Bitcoin weighing down if the price does end up dropping lower, but also as they are utilizing this capex, it is going to be putting some cash pressure on their bottom line. So again, it's going to be very important that they're able to negotiate favorable terms with those clients, potentially getting some rent up front, as we did see TeraWolf doing, and locking in a very lucrative deal, a deal that's going to help them generate a good amount of premium on their stock price and get them where they need to be for the next couple of months. They have plenty of cash, in my opinion, to get the initial purchases going and to get the construction started. So I'll be interested to see if they do a construction type loan or project management type loan. We'll have to wait and see. And them shifting into HPC AI. That does pose a risk because not all of CleanSpark's personnel are equipped to handle the HPC operations. They are very accustomed to the Bitcoin mining side. And of course, they do have Jeffrey Thomas. He is a veteran in the HPC AI side. They also consulted with a company called McKinsey. McKinsey is a consulting firm. They work with a lot of corporate companies in order to help them improve on whatever that goal could be, whether it is a throughput situation if they're a manufacturer or like CleanSpark, they need to be able to get into this HPC market. So McKinsey is going to be able to help them by providing some contacts as well as provide them some very important steps that they need to take in order to get their team up to speed for HPC. Now, another negative that they did mention would be a slowdown in AI adoption that could potentially reduce revenue and returns. And of course, CleanSpark would need to lock in some 5 year, 10-year terms. That way, if the actual slowdown does occur, they have at least got this client locked in to help provide revenue for an extended period of time. That's going to help them get some additional valuation on their properties and help them refinance some of their sites and open up some additional cash. So again, I think that's going to be really important for them as they lock in these various customers and these various sites get locked up for HPC AI, that they're able to go back to the banks and get a fair and favorable actual refinance on that asset. Now, including between the positive and negatives, the company had a couple things to say. CleanSpark does produce Bitcoin at cost below spot price through a disciplined vertical integration at scale. So again, that's really important if you look at the energy costs as well as the SG&A. CleanSpark is definitely cash positive. Of course, there's a lot of people that want to look at the depreciation side because CleanSpark does depreciate their ASICs on a 3-year uh, term. Now, one thing to note is if the 3 years come up and CleanSpark decides they're going to use those racks for HPC AI, they're not going to need to spend the cash to get more of these miners. So again, that equipment costs from a depreciation standpoint would not end up repeating itself. So keep that in mind when you're looking at this and doing your assessment. Now, the next section they conclude on would be the diversification into the AI data centers, and they do think that they'll be hosting these data centers. They'll talk a little bit more about that in just a little bit, and they will be able to leverage their deep understanding on the power infrastructure and efficiency side as they develop. Taylor Monig, of course, he is very familiar with Bitcoin mining operations, but he does have a good understanding and background even on the HPC AI because a lot of this has to do with heat transfer and fluid dynamics and engineering. And he, for one, does understand this. He can apply a lot of the science in terms of how to pull heat off of the ASIC miners now into the HPC AI realm. Just the same when it comes to immersion mining, there's immersion HPC and there is the direct liquid to chip type cooling. So I do believe Taylor Monig is going to be equipped and capable of handling the technical side of the business here. And the last section before I move on to the next page is going to be the fact that a lot of these AI data center leases rely heavily on a strong creditworthy tenant. This end customer or this guarantor is going to need to be able to prove that they can handle a 5-year or a 10-year lease in terms of having the cash flow on hand to pay it. So again, that's going to be really important, and that actually benefits CleanSpark because when they go to refinance, the actual banks that would be giving them the refinance are going to look at their current leasing customers. Will these customers be able to hold their obligations and actually pay them out for the next 5 to 10 years? And if the case is yes, it's going to just give them a better levered IRR for them to be able to get some additional refinance cash on hand and do some additional CapEx purchases and fund some additional HPC operations. So again, keep that in mind. Credit worthiness is a key factor here with a lot of these HPC customers. And let's jump down to the next page here. This page, not too much, it just covers a little bit about the company. I don't want to go into too much detail, I just highlighted just a couple things. And again, CleanSpark is considered an infrastructure first strategy. They are not looking to purchase a bunch of miners and then rent out rack space. That is not what they do. They do the exact opposite. They actually have the infrastructure available and they're going to be very selective on how they monetize that. In the past, it did make the most sense here for them to be able to utilize that for Bitcoin mining. Of course, now that the margins are maybe starting to shift in favor of HPC, it makes sense for CleanSpark now to be investigating this new business venture. Now, looking down a little bit further down, they do have purpose built factories and they do look at modular style equipment in order for them to get the most out of immersion mining when it comes to their Bitcoin miners. And I do feel that with that partnership with Summer, we'll see the same thing in the HPC AI side. Now, they do talk a little bit about their peak efficiency at 16.07 joules per terahash, and that is a testament to CleanSpark. They actually are intentional when they upgrade their fleet and when they're looking at their infrastructure that they do look at efficiencies. And again, it's just as important if you are providing a power rack system for a customer that you do look at that efficiency because those margins are able to stay in your pocket as the data center facility. And you can see here they talk a little bit about Submer. I went into some details on that, so we'll go ahead and jump down past that to the next page. They talk a little bit now about their pivot from Bitcoin mining into that AI hybrid state. They did hire Jeffrey Thomas. I already mentioned his name once. He has over 4 decades, 40 years of experience here in various emerging technologies, including data center infrastructure development. So, who better to bring on the team than someone who fully understands and has really been through various revisions of data center infrastructure than someone like Jeffrey Thomas? So again, I think this was an excellent roster increase here for CleanSpark by getting Jeffrey Thomas on the team. And the next section in terms of pivoting would be really taking a good assessment, a good analysis on their project economies at each of their sites. Now, with the halving coming up in 2028, the cost to mine the Bitcoin is going to double. So they really have to get ahead of that. And this is a great opportunity as they make this pivot into 2027. They should have at least 400 megawatts operationalized and revenue being generated. And my hope as an investor in CleanSpark, and I do believe it should be their true north, would be to get as much of their power ready to go for HPC AI so that when that halving does take place, if it is not lucrative to continue Bitcoin mining, they have a significant amount of leasing agreements that are already underway and a good amount of revenue already being generated. And then they could take a really good look at the Bitcoin mining and just figure out, do they still want to do this just as a way to hedge against any curtailment? They may still mine some Bitcoin, but maybe not as much as they are today. I'm not quite sure. We'll have to wait and see how the price of Bitcoin's looking in 2028. If it does explode, by all means, they will continue to mine just like a lot of the other Bitcoin miners in the sector. And moving on past that, they do talk about that 10 to 15-year contracts. I think that's really important with the HPC AI is it does provide them with certainty for a long period of time. And again, that is really important when companies are looking to provide valuation. They want to understand that this price tag they put on the company will remain the same. They don't want to see the price tag fluctuating very drastically month over month with price swings on like things like Bitcoin. So again, 10 to 15 years locking in solid leasing agreements, I think is going to be really important for CleanSpark in the long term. And again, they talk about wanting to monetize their overall power portfolio, and they actually talk about utilizing it similarly to a real estate portfolio. So I do feel that as these leasing contracts do come into play and they're able to lock them in, they will refinance their sites and they'll be able to use that additional capital to fund more sites, just like a real estate guru would do if they wanted to continue to add more and more homes or properties under their umbrella. And they talk a little bit about converting electricity over into Bitcoin, and they want to do this as efficiently as possible. And that's why they're still mining today because they're able to mine below spot pricing. And it does mention here that revenue generally comes from clients paying for power, space, and uptime in data centers versus having to rely on the price of Bitcoin. So, again, price certainty is definitely important and does change the game here for CleanSpark with HPC. Now, the next section talks a little bit about the large scale power in data center infrastructure. Because CleanSpark has so much land and power, they are able to lock in these leasing agreements. And at over 200 megawatts, it does look lucrative to some hyperscalers. And at some of their smaller sites, they can lock in some of the edge compute that may be necessary here for some of the low latency or some of the inference sites. So keep that in mind when we're looking at their different data centers. Don't always look at it from a hyperscaler lens. There is definitely some need and necessity here for these smaller sites that are closer to these urban areas. Now, a couple other things that I wanted to point out, and this is really important, is the fact that management's made it clear to this analyst that the company is not intending to compete with hyperscalers or AI developers. Instead, they want to have power ready data center capacity that can be leased. So they're not looking to become fully integrators of HPC with GPUs and chips. And again, this last section actually explains it best. It does say by leveraging their existing owned data centers, the electricity rights, data center expertise, with all of that, CleanSpark can participate in the growing AI infrastructure chain without assuming any of the hardware obsolescence risks. And of course, that's important because as newer chips come out, whether it be NVIDIA or AMD, it does put pressure on some of the older gen chips because now the companies and the customers are going to want the latest and greatest chips because those are going to be the most efficient and those are going to help the end customer reduce some of the costs, some of the energy costs in order to get that compute amount. So, again, in my opinion, I think CleanSpark has it right. Stay a power first and infrastructure first company and get some co location deals signed, similarly to where we saw with Cypher and Terrawolf. I don't think this is a bad idea at all. And it does keep them flexible in the future as they're able to swap out some of their modular infrastructure depending on the customer and the overall power demand at these different sites. But let's continue on down past that. This next section just covers, it's actually pretty interesting. It covers the entire timeline of CleanSpark from start to the current day. And I just highlighted a couple things I thought were interesting I want to share with you. CleanSpark actually started back in 1987. That was actually the year I was born, believe it or not. And they had a completely different name back then. They were Smart Data Corporation. Since then, a lot of things has changed. They did mention that they acquired the Atlanta data centers for about $19.4 million. If you look at the actual cost per megawatt that HPC is going to be providing for this same site, they are going to get a return on investment of less than a year when these sites go to HPC, in my opinion. So it's going to be really interesting to see not only have these sites already been paid for by the Bitcoin mining operations, but now the HPC energization at these sites are going to make it to where it's less than a year if they were to never have Bitcoin mined there to be able to fully pay off that equity debt that they took out. And they talk about the investment there at Norcross, Georgia, $145 million. And again, that was to get a lot of those immersion data centers set up there at Norcross. And that is some of their most efficient fleet items. And it does help them in terms of mining under spot. So again, 145 million may seem like a pretty decent amount, but when you look at Norcross and you look at College Park, when you look at the price per megawatt that these HPC customers are willing to pay, this purchase was just a drop in the bucket. This investment at Norcross is going to actually pay off because they are going to be able to utilize some of that equipment in the HPC side of the business. So again, I'm really excited to see these brownfield sites here at both Norcross and College Park. How are they going to be able to utilize some of that equipment, whether it's in the cooling towers or whether it's in some of the battery management side? I'm just excited to see what they're able to utilize and what the cost to convert ends up being for those sites. The next section I've highlighted has to do with that giant acquisition they did with grid infrastructure. Again, this is where both Harry Suddick and also Rory came from. So keep that in mind when you're looking at this. I'm pretty happy to see him at CleanSpark. Got a chance to talk to him last year in Vegas, and he is a very smart individual. He definitely knows how to handle himself around the financial markets with a lot of experience, and I'm excited to see what he's going to continue to do with this digital asset management team. And again, this purchase of 400 megawatts in the state of Tennessee only cost CleanSpark about $155 million. So look at that and then look at the cost of HPC and the valuation per megawatt for HPC. And you're going to see that all of these purchases of power infrastructure are going to be huge bonuses for CleanSpark and the investors, in my opinion. And looking at the bottom, this is one of the last couple of updates that they thought was important to mention. And this would be that $1.15 billion 0% convertible note. It's not due till 2032, but it does provide them with a significant amount of cash on hand. They also paid off some of their collateralized Bitcoin loan debt. And they were able to purchase back about 30.6 million shares. And again, I think that's really important. If you look at the short interest of the stock and the number of shares that have been shorted, they've been sitting around 80 million shares shorted. But when you look at how the free float has been reduced because of the buyback, they went from sitting around mid 20s to now mid 30s on a percent base for that short interest. So again, that's pretty interesting. So keep that in mind when you're looking at them. It's not like over this past year or so, the actual amounts of shorts have been going up. It's because the buyback reduced the float, that percentage increased like it did. So continuing on a little bit further down, this next page didn't have anything really to talk about, so we'll jump down to the next section. This is where it starts to get a little interesting because now we're going to be talking about some of the forward-looking modeling for HPC AI. This next section is really about the opportunity for CleanSpark here. And if you look at one of the McKinsey reports in 2024, they're estimating that $6.7 trillion will be required to build out all the data centers supporting AI into 2030. So that is a lot of cash flowing into this industry. And for CleanSpark, already having a lot of that power, they have a head start that some of these other companies are going to have to get in with. They don't have to necessarily acquire the land and get the substations up and running and get the power contracts approved by the various regional power utility providers. Instead, they are able to start working with customers and utilize the existing contracted power they already have. And again, I think that gives them the edge, a little bit of a head start over some of the other companies that now have a nice pipeline, but there's still a lot of work yet to be done. And you can actually see a pretty nice breakdown for the global AI data center market between the GPUs, the ASICs, and the hybrid data centers. And I do believe we'll see CleanSpark utilized as a hybrid data center. Again, this is really going to depend on the leasing customer that they get and the co-location. I do believe, based on that last note from this analysis, that they will be looking at co-location deals, not vertically integrated deals. Again, that's my opinion, and it is this analyst's opinion as well, but I'd love to hear your thoughts on that. But you can see here from 2024 all the way to 2034 just how that demand and the total saturation of the HPC AI will continue to increase. And again, this is a huge amount of money flowing into this sector. And I do believe we will see some amazing innovations in HPC and AI in the years to come. The other note up here was the global AI data center, the band, if you will, and really the build out. So this is how much infrastructure, how much cost in GPUs, in various land acquisitions, and in data center buildouts we expect to see globally. And then this next chart here is just in the US. So the US is going to have a $56 billion target here for 2034 in terms of the amount of cash flow for the HPC market. So pretty cool to see so much money still flowing in. And again, this shows me that this is not a near term bubble. If anything, this is just a brand new technology adoption that we are all seeing unfolded in the next couple of years. But moving on past that, you can see here one of the other adoptions would be how quickly ChatGPT was adopted by its first 100 million users. And you can see here back in 2008, it took Spotify 11 years to hit 100 million customers. You can see here Netflix started back in 1999, took them 10 years to get that many customers. Go all the way to ChatGPT now in 2022. It took them just 2 months to hit 100 million users. That is huge. And that just shows you how powerful and how much demand there really is here in the HPC AI sector. So, again, I think CleanSpark is posed for a great couple of years, and I am very much so excited to see how they're able to get into this business this year in 2026. Moving on down a little bit further down, you can see here that this OpenAI noted that the usage is actually about 6 times as much just between 2024 and 2025. So again, that's just showing how many more users are now coming online to utilize this technology. Again, this adoption is increasing right in front of us every single year. I believe that the demand will stay strong and CleanSpark will have a lot of demand for their existing power. And jumping into this next section here, covering data economics. Again, a lot of these companies are getting triple net leases with some additional escalators. That means that they will be getting paid out more year over year, depending on really inflation and some other factors like the cost of power. So that actually does help some of these infrastructure providers kind of hedge themselves a little bit. So if there is a crazy spike in power, they are not going to be completely at risk here. And the next section I've highlighted is going to be that cost of developing new AI HPC data centers. So this would be greenfield costs. It comes in at $10 million per megawatt. And again, hyperscalers are actually helping backstop some of the projects in order to help them get better borrowing rates. So again, we talked about creditworthiness customers. This is a great way. Large customers like Google and Amazon are able to step in and help out these infrastructure companies, or these co-location deals actually get off the floor. So again, I think that's really, really important. And the last thing they mentioned was the overall yield on investment. It does look like they're able to get a consistent 10% yield based off of some of the modeling. And that's because they typically generate about $1 million per megawatt. So again, not too bad in terms of that. And then that does not include them being able to then utilize that asset of real estate in terms of that data center in order for them to get some refinancing and to get some additional capital to continue to scale. So again, one data center making 10% margins is great, but if you're able to now get 5 data centers making 10% margins, again, your margin may not be changing, but your total profit quantity is most certainly increasing as you add in more and more of these data centers. And again, you're not necessarily getting into any additional complexity. It's more just scaling, and you're able to stack more and more of these customer leases on. So, again, really excited to see CleanSpark get into this space. And let's show how this specific sector is now being evaluated. There's a couple different ways that analysts will put it out there. Some of them use the REIT analysis, and they value them based on their NAV and also some of their funds from operations. And the second way that a lot of these analysts value the data centers is going to be based off of the EBITDA. They do take a multiple of that EBITDA in order to come up with a proper market cap, which does relate back to a price target. So we're seeing a huge market cap jump on a lot of these Bitcoin mining companies. Once they announce that first lease, it does push them into this new category, and they're able to work off of numbers to be able to formulate a better market cap value. And that's why I don't think you can state that the price of this HPC pivot's already been baked in. We need the terms of these contracts, these leases, before we can get a true EBITDA multiple and get that price target updated. Again, that's my opinion. If you think differently, let me know in the comments. But moving on down past that, they talk a little bit about an AI server. So if you're interested in the details on that, feel free to pause the video. I'm going to jump down a little bit further and talk a little bit about an interesting fact, and that's on the power. Of course, my background is in power generation, so I like to look at some of these statistics. It does show that newer data centers are built with about 100 megawatts to a gigawatt of capacity, and they can consume as much power as 800,000 to 8 million homes. Now, that's a big difference, but again, that's because we're looking at low end data center sites at 100 megawatts versus high end at over a gigawatt. Regardless, the total amount of power draw of these data centers is taking up to 8 million homes. So that is incredible if you think about that number. And moving on down a little bit further, you can see another cool stat. And I actually heard this from a power utility provider about a year ago, and that is that the amount of power consumption using an AI query versus just a simple Google search is about 10x. So that just shows you the power demand for HPC AI compared to where we're currently sitting with just using internet searches. And that goes to show that the amount of power we're going to need is going to be incredible over the next couple of years. And again, my company is seeing huge demands of power going into the 2030s. And moving on down past that, I wanted to stop in the cooling. Cooling is really important because it has to do with a lot of the efficiencies that we can expect out of these HPC data center sites. And they talk about the various ways that you can cool the data centers. Of course, the initial ones were air cooled. It did move into some liquid circuits, some heat exchanger types. Then it went to direct liquid to chip. And then the latest would be immersion cooling technology. CleanSpark is very familiar with immersion cooling technology, as a lot of their newest gen ASIC miners are immersion mining, and I have seen those in person myself at the Sandersville location. And they do have the, of course, air cooled side. So Taylor Monique is definitely familiar with how to improve efficiencies at various sites, utilizing the different thermodynamic aspects, the fluid transfer of liquid. Now, it shows the rack densities as well. And I think that's really important. If you look at some of the older legacy data centers, their rack densities was only somewhere around maybe 10 kilowatts to maybe 50 kilowatts, not a huge amount of rack density. And again, with the amount of power demand and energy consumption utilizing the earlier data centers, maybe that's fine. But when you're looking at the HPC AI side, you can see we're now hitting the upwards of 150 kilowatts per rack here in terms of density for this latest gen in HPC AI. And again, I think CleanSpark is now going to be able to build out sites that can hit this type of rack density. And again, they don't have to actually provide the GPUs. I do believe we will see co-location deals, and those middlemen companies, kind of like FluidStack, will come in with the chips. They'll take on the risk of chip obsolescence, and CleanSpark will have the properly cooled racks in order to be able to support that high density load. And again, I think a lot of customers are going to be looking for this, and it's going to make for a very lucrative entry into this sector for CleanSpark. Now, moving on past them, they talk a little bit more about data centers past and future. Didn't want to stop on that. I did want to point out the overall racks, and you can see how that density has changed over time. Up here, it mentions 30 EW. That should be kilowatt. You can see here on the X axis label that this is kilowatts, and you can see over the last decade or so, a little over a decade, decade and a half, you can actually see how the racks have changed. How many of the racks now require 30 plus kilowatts per rack compared to back in 2011. So again, interesting data point, does show how the entire sector is starting to change. And my thoughts would be that some of the legacy data centers, they have no choice but to gut their current factories and build out the more efficient rack spaces or purchase greenfield sites and then have to completely flip the switch on their older legacy sites. So again, they're going to be getting hit with the same types of upgrade requirements that we're seeing with the latest companies that are now jumping into HPC AI. And again, they don't have Bitcoin mining to fall back on as they pivot their current sites. So I think you'll see a lot of them having no choice but to purchase greenfield sites and build from scratch. Now, again, we already talked about the demand and how much queue space there is in ERCOT for some of this. So the question is, will the legacy data centers already have the capacity, the power under contract to be able to do this and build out a greenfield space now? Or will we not see some of the legacy companies making that switch until later years, maybe into 2030 and beyond? We'll have to wait and see. Moving on down past that, here are some important parts as well that the analyst built out, and it has a lot to do with CleanSpark sites and pipeline. They talk about the Texas campus again, and that Texas campus is under the jurisdiction of ERCOT. ERCOT would be Electric Reliability Council of Texas. So here, ERCOT mentioned quite a bit between companies like Iron and also companies like Cypher. Just want to mention here with CleanSpark now at the Sealy site, they are also going to be under this jurisdiction. They talked a little bit about that 285 site getting about 200 megawatts of critical IT load. And again, that's going to be first half of 2027. And they do expect, and this was an interesting ad that I did not recall seeing in a press release, they do expect that CleanSpark may look into natural gas because of its proximity to some of these sites as another means of fueling the data centers. So that is a behind the meter type of power generation. They will look at potentially power plants, tapping into them in order to be able to power these HPC sites, specifically in the state of Texas. So I'll be interested to see how they potentially get into this specific industry, as this is my personal industry. This is what I do for a living here, is power generation of natural gas power plants. Now, moving on past that, they talk a little bit about the amount of demand in ERCOT specifically. The interconnection queue request is sitting at 230 gigawatts in 2025. And of course, CleanSpark has already passed this hurdle. They already have 285 megawatts that have already gotten approval for interconnection, and they will be able to energize as early as first half of 2027. Now, with that, they do mention that some of the companies that are just getting started here in ERCOT, if they have more than 75 megawatts, they have to pay a large study fee to this ERCOT group before they can even get considered for some of this additional contracted power. So again, really, really important that CleanSpark already has this power under their umbrella, and they're going to be able to monetize this in the first half of 27. And they give you some pretty good graphs here. Another one about the various stages of power in the ERCOT region. You can see here, no study submitted. A huge chunk of the almost 200 gigawatts here by 2030 is all based on no study submitted. You can see here in the 2026, I have it highlighted. You can see that small amount that's already been energized, and then that next very small sliver that's approved to energize but not operational. And then in 2027, it grows a little bit more. CleanSpark is sitting in there in 2027. And you can see the difference from 2026 and 2027 is not much. So I do think that CleanSpark will be of some of the first groups of companies to be able to start utilizing this greenfield space for their projects. Of course, Iron is also in the running here in ERCOT as well. So I'm excited to see CleanSpark joining some of their peers here in this region. Now, outside of that region, let's move over to the state of Georgia and some other bullish reasons why this is a big positive here in the state of Georgia is because management does highlight the fact that they're already being looked at as a top candidate for AI, and because they have some favorable power capabilities and characteristics. They have the optionality to be able to curtail energy on demand, and they are not required to in the state of Georgia. This is done at the request of the various power providers. So I thought that was interesting. I always thought that CleanSpark was required to do so, but they do it upon request as a way to keep and build even better relations with these various power utility companies. And again, you can see here that they do talk a little bit about some of the tenants that are interested in the power here in the state of Georgia, and that multiple tenants are actually seeking leases as early as 2026. And because of the delay in the ERCOT region of power being approved and contracted, you can see here that CleanSpark does have an edge early on here in 2026 to sign some leases for a large site. So I am expecting here in the first quarter of 2026 to see a lease come out. Again, that's my opinion. That's my hopeful expectation. We'll have to see if we get anything delivered here in the next couple of weeks from CleanSpark in terms of a lease. And outside of some of those larger buildouts, CleanSpark also talks about some of those contracted power sites there around the urban areas in Atlanta near the airport. They've got a total of about 100 megawatts available of contracted power near this area. And of course, you do need to consider some of the various utilities and efficiencies that the HPC will take on. So take whatever that total amount of power is, divide it by about 1.4, and that's going to give you the amount of critical IT load available. So again, that's why I've been conservative and stuck with about 50 megawatts of critical IT load here near the Atlanta airports, looking at this number. So I'm using about 1.5 as an efficiency division factor here. Now, moving on past this section here, look at this last section before we talk a little bit more about the modular side of their business. And again, this will be with the Submer. But looking at the rest of this analysis, you can see here that they're stating that the Bitcoin sites they're currently mining at will continue to support them in terms of cash generation for some of their additional build outs. And again, that's going to help them without necessarily needing to dig into the equity side, the equity market side. I do think we may see some additional secure notes come online here in the next few quarters or years for CleanSpark, but we should be able to see one or two sites coming off the ground, getting some debt financing through traditional means, and then as they want to continue to rapidly scale, they may need to tap into the equity markets in that amount of time. But I would assume, based on the total amount of HPC megawatts, the market cap would be at a significant multiple, which means that that drawdown on equity is not going to be as intensive as it is for a Bitcoin mining operation. Again, that's my opinion. Love to hear your thoughts on that. Now, moving on down into the next section, just highlighted a couple things here I thought were important. Again, talks about Submer being announced as one of their partners here. And Submer does have the modular style infrastructure that CleanSpark can take advantage of in order for them to be able to get some of these high density rack space build outs. And a lot of that is going to be able to be done at their Submer manufacturing facilities and then shipped to site. That's going to save a lot of time at site, and it keeps a lot of the build experts there at that factory instead of having to spread them across multiple sites around the world. So again, I think this is an excellent thing that CleanSpark has at their disposal. Again, outside of that, they talk a little bit about some of their reduction in time by utilizing this modular setup. They can reduce times by 30 to 50%. So instead of build outs taking 18 to 36 months, they're only going to take about 6 to 12 months. And that still puts them in the window for some of these hyperscalers looking for power by the end of 2026. Moving on down past that a little bit further, you can see here that with these modular data centers, you do get some improvements on efficiencies as well. And you can see some of these modular sites have some ratings down around 1.15 or 1.25. And this rating would be that multiplication or division factor I was talking about when considering the critical IT load. So, looking at 200 megawatts with a 1.15 PUE range, you're able to take that 200 megawatts divided by 1.15 instead of 1.4, as I mentioned earlier. So, again, as they build out these various modular data centers and they're able to utilize the latest and greatest gen on their cooling infrastructure and other various efficient factors, they're going to be able to hit these lower PU numbers, which is going to get them better margins for their data center renting. And again, they summarize this here, talking about faster development, talking about supporting high power densities and cooling requirements for HPC AI. And then the prefabrication, I think, is an important factor. And that talks about the reduction of risk for buildouts at sites in case anyone gets any calculations wrong. There's no holdups at site. And again, you're not spreading around some of the technical minds that would be needed in order to do these buildouts. There's a very important skill set from a fabrication team member. As you look at some of these blue collar employees, they're not going to be spread out across the globe. Instead, they're going to be at these factories, which is going to be more efficient for the infrastructure companies. And the last section here talks about scalability from kilowatts to megawatts. And that's because you're able to drop in very large infrastructure pods that were prefabricated in the factories directly at site. And depending on how much power is needed, you just continue dropping more and more of these power shells in place. Now, moving on past that, they actually do a good job of comparing some of the other peers that have already made the pivot into HPC. I'm not going to read all of these because I want to keep this video shorter than it already is. But you can see here they have Hut 8, Galaxy, Riot, Terra Cipher, Core Scientific, Applied Digital, Iron, and New Era as some examples of companies that have made this pivot. And you can see some of the capacity as well as pipeline, as well as some of the leasing agreements that have already been signed. And this just goes to show just how much demand are we seeing and how large of an overall sector are we seeing from the Bitcoin mining pivot into HPC AI. And again, why do I think that this is important? It's because it shows that all of these Bitcoin mining companies have a head start on companies that are now looking at the demand in 2024 and 2025 and having to find greenfield spaces and hunt down power and have no relationships with any of these power providers. And there's just a lot of additional steps and work that has to be done before a company can get into this industry if they don't have some of the power infrastructure history that we see with the Bitcoin mining companies. A couple other companies, Talon Energy, Solana Holdings are a couple other companies that are mentioned here in this analyst report. And again, if you want to see some of this, just pause the video and you can read through some of these stats. Continue on past them. They talk a little bit about CleanSpark's financials and their analysis there. I want to look forward at the forecast for some of the revenue modeling that they have. You can see here that they are using the current price of Bitcoin. They had it sitting about $91,000 in their analysis. So they're not looking at any of the revenue or any price targets with Bitcoin sitting at 100,000 or 120,000 or even 150,000. But the same could be said, they're not looking at it from a $70,000 or $60,000 standpoint either. So keep that in mind. Make sure you're understanding some of the inputs that are going into this outlook. And then looking into this, you can see here that they don't include potential future AI lease revenue. I mentioned this already. Yes, they are looking at a slight premium for some of their power and land and the energy contracts they have, but they're not looking at any actual lease revenue. And again, that's because without an inked deal, there is no numbers to use as a springboard and as an EBITDA multiplier. So again, I think this first lease is going to be changing the game in terms of CleanSpark's price. Again, my opinion, not financial advice. And this company sees CleanSpark with some AI revenue in the year fiscal year 28. I think we'll see it in 27 personally, but this analysis has them with it in 28. And that's why when you looked at their fiscal year 26 and 27 revenue numbers, they were so much lower even than 2025. If they're able to get some of these customer sites built out by the end of 2026, like these hyperscalers are wanting, I think we'll see some revenue in 2027. Again, this is just my opinion, but love to get your thoughts if I'm missing anything here. Moving on down a little bit further, they talk a little bit about how management does plan on adding about 5 more exahash. However, in this analysis, they're not looking at that as really causing a larger jump in revenue because they're saying the overall global hash rate is going to be increasing significantly. And in order for CleanSpark to stay competitive, they're going to need to hit that extra 5 exahash just to keep status quo currently. So again, just want to point that out. And again, I did highlight again, they're giving some of these numbers with no AI revenue built in yet. Moving on down a little bit further, if CleanSpark has AI revenue in fiscal year 28, these are the numbers that they did provide. The first of which says no HPC AI revenue and just the 521 million in Bitcoin mining revenue. That would get them an adjusted EBITDA loss at $156 million for fiscal year 28. If they get just 100 megawatts signed and energized and revenue rolling here for the full year of 28, they are saying that they'll have 653 million in revenue and that adjusted EBITDA would now be at a loss of just 37 million. And then they give one more number here, 300 megawatts of AI leases. That revenue would provide them with $917 million and they would have a positive EBITDA of 200 million. Now, I personally think we'll see over 400 megawatts by 2028, but we'll have to wait and see. And if that's the case, that means that revenue would be over $1 billion and that adjusted EBITDA would be significantly increased, probably closer to, I would say, $300 million. So again, I'm excited to see CleanSpark ink these first couple of deals and provide some additional timelines on that annual run rate. Now, looking down a little bit further, they talk about Bitcoin and a little bit more on cash flow. They did talk about the options group, and I wanted to point this out. I already mentioned this once, but I'll mention it again. In fiscal year 25, last quarter, CleanSpark raked in $2.8 million in options premiums, and they also talked about the month of October raking in over 5 million. But you can see here that the 2.8 million was done using 5,425 Bitcoin contracts. And you can see here that this is part of their overall revenue stream in order to hit that 12% amount of additional revenue or margins here. And this has to do with the premiums. They are selling out of the money put options on Bitcoin through cash secured puts. Also, they're selling out of the money call options, covered calls utilizing some of their $10,000 Bitcoin position. So again, these are all ways that Rory's team, the Digital Asset Management Group, are generating some additional yield for the company, and this is helping pay for some of the SG&A. Now, the third way that the dam is making money is selling near the money call options, and that would be the ones that they do anticipate on selling. So again, we've already talked about how they plan and have been selling some of their Bitcoin month over month in order to fund operations. They're going to sell some of these and they're going to put them with covered call options in the money in order to generate some additional premiums with the sales. So again, just a third way CleanSpark is generating some additional yield utilizing their HODL. So again, some people are saying, why doesn't CleanSpark just completely stop mining Bitcoin? Why don't they sell their HODL? They're generating 12% in revenue on their HODL. It's not costing them any energy. They have a few team members' salaries that they cover, and the rest of that is helping pay for some of the additional costs of their executive teams in the SG&A. So I think this is an excellent use of that treasury, and I hope that they continue utilizing this and we see some more aggression of them here in 2026. And as I already mentioned about the 12% yield, they give you some details as to just how that impacts their SG&A. It says that the overall $108 million of cash generated, and this would be forecasted cash generated by the Digital Asset Management Group, would help them pay for a good amount of operating expenses. They did have that $171 million mentioned as operating expenses in fiscal year 25. This would be about a 63% covering, and this would not include depreciation and amortization, but it does cover a significant amount of payroll as well as some of the stock-based compensation. So again, great method of utilizing that treasury in order to help reduce some of the burdens and some of the costs on the HPC AI or even the Bitcoin mining side. So this is just a third stream of revenue that's already been operationalized and is definitely helping on the bottom line of that balance sheet. Now, they talk a little bit more about the funding. And they did say that some of it would be funded through equity portions and that it would also come from borrowing against their Bitcoin position. So CleanSpark does have a few different ways that they can actually fund this HPC venture. Of course, they have cash on hand from the secured convertible notes that they already exercised. They also have equity. Of course, they could generate some ATMs. They could do some additional secured convertible notes, but they also have that secured line of credit through the collateralized Bitcoin. So if they wanted to, they could then take a loan out against that Bitcoin, hold the Bitcoin, get some cash, pay a little interest, but that does give them some optionality, some flexibility. And with the very quick to scale to market, the 6 to 12 month period, you're looking at paying interest for maybe a year, maybe year and a half on that cash, and then you're already generating revenue. That's going to more than cover the interest and actually help pay off that loan. And they're going to be able to continue to scale more and more. So, I, for one, am very excited to see how they're able to leverage all their different financing levers here in the next couple of years. And one other angle that this analyst does talk about in terms of some of the HPC demand would be a surge in demand of compute and power assets for large language model workloads. So that's going to be very important for CleanSpark in the near term as there's just so much demand and not enough contracted power. So if CleanSpark is able to jump in 2026, lock in some of these leasing agreements, they are going to be able to command a pretty good amount of the contract negotiations because, again, it's all about supply and demand. And there is a current supply gap in terms of contracted power here in 2026 and in 2027. And they do break down that 12-month price target of $22 by three categories. The first of which would be that Bitcoin mining revenue at $18 per share. They actually talk about the market cap multiple that can be expected from Bitcoin mining. It's sitting at about 7.3% based on that 2026 revenue. And this would be their analysis, their multiplier. And with AI, they do mention that they do expect about 11x on that revenue. So again, if CleanSpark's able to sign some deals and get revenue generated in 2027 instead of 2028, I do believe we'll see this analyst up their game and up their price targets here on CleanSpark. Now, it does mention here that they do believe CleanSpark does deserve a premium on some of their emerging power and infrastructure already available. And they do talk a little bit about that here at $2.66 per share. That has to do with the value of their pipeline. And that is not, again, based on any leasing, but just on the fact that they have this, and this is in a high demand situation with a very low supply. So they're giving them just a modest $2.66 per share valuation here on that aspect. And then finally, from a cash and Bitcoin standpoint, what they have on their balance sheet, they're giving them $1.43 per share based on those assets. So overall, $22 a share, they give it broken out right here. If any of these were to change, whether it be the price of Bitcoin jumping higher, then getting some HPC contracts signed and revenue actually forecasted in 27, I do think we'll see an analyst changing their target here for CleanSpark. All right, and that wraps it up for me. I hope you enjoyed this in-depth review of Maxim's analyst report here for CleanSpark Inc. If you did like the video, consider giving it a like, subscribe to my channel if you haven't already, and drop a comment. Let me know your thoughts about CleanSpark and this valuation. Do you think it's undervalued still? Do you think they're overvaluing the company? Love to get your feedback on that. And when do you think we'll get that first HPC deal signed? Love to hear your thoughts about that in the comments. And with all that said, hope you all have a great rest of your day. Keep calm, hash on, and I'll see you on the next one.